Hello, students. I'm Mr. Sesi George, your financial accounting facilitator. All right. So, in this video, we are going to continue with the topic joint venture accounts. So, if you have not watched the last video, please do that before you proceed with this. Okay. So, in the last video, I introduced the concept of joint venture. Then I promised that we are going to continue with the accounting entries. So, in a nutshell, I said joint venture is where two or more businesses come together to execute a legal activity. They arrange to execute a legal activity known as venture for the view of making profits. A joint venture is an arrangement whereby two businesses or more come together to carry out a business activity for the view of making profits. And that business activity is called a venture. Then the parties to the venture they are called venturers. All right. So you can try to watch the last video. All right. So in this video, we are looking at the accounting entries. Like I told you in the last video, there are basically three accounts in joint venture. Then let's take, for example, A and B are venturers. They are venturers to the. Okay, we are going to have three basic accounts if A and B are the venturers. In the books of A, any transactions made by A that relates to the venture will be recorded in joint venture with B. Okay, I'll repeat, any transaction that is executed by A in relation to the venture will be recorded in joint venture with B account in the books of A. Likewise, in the books of B, any transaction executed by B in relation to the venture will be recorded in joint venture with A. Take note of that. Take note. Any transaction executed by B concerning the venture will be recorded in this book, joint venture with A, in the books of B. Okay. Then this account, that's joint venture memorandum account, will integrate, we combine both the transaction of A and B together. That's joint venture. Without, it's not a double entry account. Okay, you are not using the double entry. I'm going to show you. Let's take, for example, any payments. Supposing we made a payment on purchases. Okay, A made a purchase, you will debit the joint venture with B. All right. If A make expenses concerning the venture, expenses will be debited. All right. If A make sales concerning the venture, you will credit joint venture with B. All right. Any sales will be credited on behalf of the venture. Okay. Likewise, any sales, any purchase here made by B on behalf of the venture will be debited. Any expenses will also be debited. Okay, expenses. Can you see that? You debit it. If the question tells you that B makes sales on behalf of the venture, sales, it will be credited here. You credit this, credits. Okay. Don't forget to write your Naira column. All right. All right. Then, if you want to prepare your joint venture memorandum accounts, you will add both sales together. Purchase you add for A and B. You debit. This one is just like you preparing the profit or loss account. Okay. You add. This one is for A plus B. Okay. The expenses of A and B, all right, Then the sales. So it's not a double entry account of A and B. Just bring out, that's just take the item on the credit, you add it with that of B. Okay, A and B. That's all. Then you will ascertain the profit. So the difference becomes the profit. That's the balancing figure. Is the profit. Okay, is the profit. All right. Then this is what you do. You add this. Then it must be equal to this. Then you say profit carry forward. Then this is profit for the year brought forward. All right. Then you share the profit. You now write share of profits. So for A and B, as simple as that. Then you'll be given the sharing ratio. Okay, if this is 2/3, then this one will be 1/3. It depends. It may be 2/5, 3/5. Then you share. The students take note of that. You share and you bring the venture to an end. All right. So you take, supposing you have shared 50 naira here, you have shared 30 naira here. Okay. Then you take the share of profits as it is. Look at the share of profit here. Just take it to A. So you come here and say share of profits. All right. Then just take the share of profit here. All right. Just take it to B and say share of profits. All right. Bam. Then if this side is more than this side, you have cash received from what? From B. Then this account will balance up. Okay, this account will balance up. Then if you have cash received, the figure here must be equal to the figure here, which is cash payable to A. Bam. Then this will balance up. So you can look for a question just to practice. All right, look for a question to practice. So if you have any problem with this, try to call my number. This is my number, 0881244014. I remain Mr. George. That's my WhatsApp number. I remain Mr. George Sesi, the account teacher. Hope you understand. If you do, please remember to share this video with your friends. Share with your friends. If you understand, if you like the video, do share with your friends. All right. And don't forget to always remain safe. Bye. Hey.